So, good afternoon, good evening, boa tarde, buenas tardes, depending where you are in the world. My name is Julio Figueiredo, and I'm the Director for Latin America at Silicon Valley Bank. I'd like to welcome you to our Investing in LatAm webinar, the Tech Tsunami. And today we have a really cool panel, starting with everybody's names starts with J, Julie, Julio, and Julia. They are not only partners, clients, but also friends. So Julie Ruvolo, Director for Venture Capital at LAVCA and EMPEA, and Julio Vasconcellos, Partner at Atlantico. So the first half of the webinar, Tanai, can you just put the next slide with the speakers? Yeah, sorry, I mixed up the order. So speakers, me, Julie, and Julio. So the first half, Julio will go over the main points on the LatAm Digital Transformation Report created by his firm, Atlantico. It's a 200-page report, so he's going to condense in a few slides with the main points. And then we're going to have a conversation with Julie, who also has a lot of very insightful information. So the idea here is to make this very interactive. Please submit your questions on the chat. So on the second half of the webinar, we will be asking questions and making this interactive. We want you to participate. So before I call Julio, just some housekeeping rules. So all lines have been placed on mute. To hear it clearly, please turn your volumes up. I think at this point, everybody is tired and know all the Zoom rules, but feel free to use the chat function to send your questions. I'll be moderating and looking at the questions. We try to get to all of them, and we will be recording. We are recording the webinar, and within 1 to 2 days after we finish the webinar, I'll send you the recording and also post on social media. I think that's it. We're ready to roll. So Julio, welcome to the stage.
Thank you, Julia. Thanks again for the invitation. It's always a pleasure to be here, both with you and with Julie. And I think today we have the special treat of having the three J's together. I think, as you mentioned, I'm going to start sharing my screen here to show the report. As you mentioned, we're going to spend about half the seminar at the beginning going through, I think, a few of the highlights of the digital transformation report that we published earlier this month. I think some of the folks here on the call have probably come across this. And as Julia mentioned, this is a sort of a 200-page extensive report. So we're really just going to pick out a few of the highlights and some of the most interesting things to share with you today. And I think that the best way to really think about this is almost as a preview for the whole movie. So, if you're interested, I would recommend you go to our website at atlantico.vc, and you can download the whole report, be it in English or Portuguese, as well as sort of the executive summary. And obviously, any feedback is always welcome. But before I get into it, I just wanted to do a quick shout out here to the rest of our team, who's actually the folks that did all the hard work. You have here our entire research team, myself and my partner Guilherme, that mostly put together the presentation and are here today to present things. And then obviously we have a couple of our other partners on Atlantico, Hugo Baja, Machi, and Florian, who are also pretty critical in terms of just providing feedback and helping us really shape this storyline. I think that a lot of you will recognize the flow of the story, and I think a little bit of the themes. A lot of our inspiration came from Mary Meeker's annual Internet Trends, and we felt like having something for Latin America was really sort of was long in coming. So we wanted to put this together really to show the promise of the region and what kind of interesting things we've been seeing in terms of internet and technology transformation here. So one of the big themes that we have here is sort of this old, often cited quote from Marc Andreessen from back in 2011 from an op-ed he wrote in the Wall Street Journal of software is eating the world. And I think that the key thing that we wanted to show is that Latin America, much like the US and China after it, is no different. We really are seeing software transforming every major industry, every business model, and it's going to have a lasting and massive impact on the region. Curious thing is that when Marc Andreessen wrote this op-ed in 2011, if you looked at the value of all the public tech companies that were headquartered in the US as a percentage of the US GDP. So kind of use that as a metric for tech penetration in the US economy. You were roughly around 13 or 15% percent range. And when you compare where we are today, about 10 years later, you're almost at 40%. So even when you look at a country like the US that already had huge tech penetration and tech transformation, you can still start to see how actually that trend has only continued, and more than continued, it has actually accelerated. And I think a big theme that we wanted to highlight in the report about Latin America is that we're only really getting started here. And not only are we getting started, but things seem to be accelerating. And I hope to show you all some interesting numbers that we put together with the contribution of a lot of companies. A lot of the unicorns here in Latin America shared some proprietary data that we were able to put into the report to sort of really give a lot of texture behind some of the headlines that we often read. So talking about this exponentiality of the digital transformation, you can clearly see how in the last 20 years, you can see that curve up and to the right, accelerating over these last 3 to 4 years. This is the curve for Brazil. The curve, if you look at for all of Latin America, is actually very similar. That number that we saw for the US before, it's at about 2.5% now, sort of this penetration of tech companies as a percentage of Brazilian GDP. If you compare it in Latin America, the number's also around 2%. So been growing fast, but still very early days in terms of the penetration of technology. And you can clearly see here where Brazil is, 2.5%, or if you take the Latin American average of 2%, you can clearly see that we're way behind what we see today in the United States or in China, which I think are often at the forefront of a lot of the headlines. But even when you take a developing country like India, we still have a lot of room to grow. And I don't think it's a question of not having grown, as we saw in the previous chart, but I think it's much more of the fact that the acceleration in Brazil and Latin America just happened to start a little later. So I would say that, you know, the US, when you actually look at the trends, is approximately 5 years ahead of China. When you look at where the curves, the Chinese curve is today is where the US was 5 years ago, and China is approximately 10 years ahead of Brazil. So you can roughly say that in 10 to 15 years, the expectation is that Brazil, if we continue in the same trajectory, and again, Latin America looks very much the same, we should be seeing over this next decade, Brazil being in a similar level to what you've seen in the US and China. And when you start thinking about the magnitude of that impact of the tech transformation, you're really talking about value creation here that is measured in the hundreds of billions of dollars if you get to a level like India, and actually over $1 trillion if you start talking about levels like the US and China. So we're really talking about massive value creation when you talk about the next decade and the impact that technology can have in the local economy and the region as a whole. Moving forward, I think the other theme that we wanted to highlight in our report is that not only is software eating the world, but the genie's out of the bottle when you talk about software and innovation and technology trends. And I think that Latin America, Brazil, Mexico, Argentina, all the countries here are no different than what we started to see years ago in more developed countries like the US and China that we showed before. And this question of the future already being here is very much an evidence when you look at the data. And the question is that really it's just not very evenly distributed, as William Gibson, for any sci-fi fans out there, have read his works and I think can really appreciate this in terms of what the technology revolution is going to look like in Latin America. And I would say that it's not really a promise that we're talking about here. It's not things that we forecast are going to happen in the future. When you look already this year, the largest company in terms of market cap in Latin America is now a technology company. So you now have Mercado Libre, based out of Argentina, but really present in the entire region, is now worth more than, you know, old leaders like Petrobras, Vale, Itaú, and other continental leaders. And we're starting to trend towards the same things that we saw in the US and China, where the largest companies in those economies actually end up being tech companies. So we're starting to see the first steps and the first phases of what we believe is going to be another decade of transformation in Latin America. So the next way that we try to forecast the impact of technology and innovation in Latin America was to try to see where people, capital, and regulation were going. We felt that if you follow the people, right, follow the talent, where are the smartest people and most able people going in terms of career progression, where's the capital going, the financial capital going in the region, and where are the regulatory trends going? I think that that would be a great way to forecast what we can expect in the next, call it 5 to 10 years. And I think that what's important here is that all of this, the trends of people, capital, and regulation, they happen within a broader socioeconomic context, which is what the region looks like today. Because just the fact that we've seen the story play out in the US, and I think we saw it play out very differently in China and very differently in other regions, that really the way that the story plays out is very much a function of what the initial context is. And that's a context of population, of distribution, of the economy, and multiple other factors. So the way that we actually started out our report was by giving a little bit of a briefing of the socioeconomic context that exists in Latin America, which I'm not going to cover here for all of you, but we think it's really critical because just because something has happened in the United States doesn't mean that it's going to play out in Latin America the same way. And we actually believe that the way it's going to play out could actually be quite different. And we highlighted a few sectors that we feel are already giving us a little bit of a taste or a little bit of a preview of how things are going to happen. And I think the final thing that I would say that we try to focus in on this framework that we put together is that these three factors, people, capital, and regulation, they don't live in isolation. Not only do they exist in this context, but they actually have an impact on each other. And when all three things, when we're firing on all three cylinders together, when all cylinders are firing, you start to create this flywheel effect that actually generates a lot of this acceleration that we've been seeing. So we try to tease out a few of these trends to really give a little bit more of a flavor for that. So going into people, the first one of the factors, when you look at the top graduates of the top universities, and this was a report that we did with Brazilian graduates, we surveyed, it was 1,700 different university students in Brazil, from the top universities. And we didn't do this for all of Latin America, but I would hazard a guess that it looks fairly similar. But when you look at the top talent in Latin America, when you look at technology companies, be them startups or big techs, they already represent the sector that most of this future generation of talent wants to go work. We already see over a quarter of students wanting to go work in tech. And when you go and you ask these students whether or not they plan on founding a startup at some point in the future, 39% of them say that in their plans, be it right after graduation or a little further down the line, they do have entrepreneurial plans. So it's great to see the next generation of talent really thinking about tech as being top of mind, and a lot of them thinking from an entrepreneurial mindset of how to go and solve these big problems or tackle these big opportunities that exist in the region. The other thing that we think, going back to the flywheel and sort of tying the people and capital element together, is looking at how much wealth is being created by some of the unicorns in the region. And here we have 6 different, these are real unicorns across Latin America that we surveyed, and we share their data anonymously here. But we try to figure out how many of their employees were going to become millionaires. And here we considered people that were going to be making over R$1 million from their equity grants today at current valuations, if the company were to have a liquidity event at the current value. And what we see here is that the distribution of wealth, and this is wealth creation, goes beyond what traditionally was the case, which were only the founders. You start to see here sort of this company F here, Unicorn F, almost 200 people becoming millionaires, and the majority of them sort of around that 80 people on the employee base becoming millionaires from their equity grants. And we think that this is going to sort of help to drive that flywheel, because future generations are going to see friends going into technology, going after oftentimes sort of mission-based initiatives that they feel are very fulfilling, great growth opportunities from a professional standpoint, but also very financially rewarding. And we think that this is going to attract even more talent into the tech space. Now, looking at capital, and this data is from LAVCA, and Julie, after my presentation, is going to give a little bit of a preview of what we're seeing in 2020. But their data is the best that we've seen for the region. And you can clearly see here how when you look at venture capital investments in the region, we broke out Brazil, but also all of Latin America. You can see that over these last 3 years or so, you've almost been seeing 100% year-over-year growth in terms of the capital deployed. So there's more talent going into tech. you have more venture capital investing behind this talent and the new companies. But also when you look at more traditional and perhaps more conservative sources of capital, we did a survey with 30 of the biggest Brazilian family offices, and we asked them what was their current allocation into venture capital, which was 3.5%. And also where they expected this to grow into in the next 5 years in 2025. And sort of the biggest family offices expected that allocation to grow by over 100%, by doubling. So you also see not only venture capital funding going in, but also sort of these long-term investors that are from the region. Historically, were more conservative. They also plan to deploy more into technology, into venture capital, into innovation. But back to my headline, right? We've been growing a lot. We've been accelerating. We just saw how much investment's going in, but there's so much more to grow. When you compare how much venture capital is being invested in Brazil, again, Latin America is very similar to these Brazil numbers. I just picked out Brazil as the biggest economy because it's easier to focus on that. And you take that as a percentage of the market size, of the percentage of GDP, you can see that Brazil is a fifth of what the United States is. And even when you compare it to India, which is another developing market, we're only at about a third or so of the Indian level. So even though we've grown a lot, even though there is a lot of promise, the ceiling is still much higher in terms of the need of capital for these companies, these technology companies, to continue to grow. However, I think not all things are rosy, and we all know, all of us that live here in Latin America or have spent time in the region, that we still have big problems. I would put at the top of the list poverty and inequality still being a huge social and economic challenge for the region. You can see here in Brazil, really. I would say almost shameful numbers here as far as the percentage of the population that is living in poverty or extreme poverty. Really a lot of people that aren't getting sort of their basic needs met. So clearly a huge challenge that has to be overcome, not only I think by the government and by society, but we also think that the private sector has a big role to play in this. And when you look at inequality, we took here the Gini coefficient from Argentina, Mexico, and Brazil, and try to compare it with other markets. You can also see how we're also a more unequal region, which is also sort of very, very frustrating, I think. But trying to be maybe optimists and trying to maybe see a little bit of a silver lining, we do believe that technology and startups and innovation can play a role in employing people that perhaps didn't have gainful employment before. We think it can help redistribute some of this wealth that today is still very concentrated. And we think that one interesting case study that we dug deeper into when we looked at our report was looking at the gig economy. We looked at ride sharing, food delivery, and all of these other businesses that are built atop autonomous workers that can work in a more flexible manner. And either generate sort of meaningful parts of their income or supplemental parts of their income. You can see that demand for the gig economy and gig economy companies has been massive, right? You today see almost 4 million people that are employed by some of these delivery apps in Brazil alone last year. I actually think that if you take these big ride sharing and delivery companies, we took Ifood and Rappi as the two biggest ones for delivery, and Uber and 99 as the two biggest for ride sharing. They actually, as a group, they actually represent the largest private employer in Brazil. So really, we do see the opportunity for job creation, for income generation, and starting to provide a little bit of closing a little bit of that gap in terms of providing opportunity to people. And we had a fairly rich, data-rich part of our report on this topic. So let's pause here for a second, because a lot of the trends that we saw in the last year were trends that happened before the COVID-19 pandemic. And I think that this quote by Vladimir Lenin, which I think is always ironic for a venture capitalist to be quoting a communist, But I really think that there's nothing that captures what we're living through today, especially when you think about technology, right? Really this question of, decades where nothing happens, and really some of the weeks in our history where decades happen. And I think that the early weeks of the pandemic very much represented, I think, what Lenin wrote about almost a century ago. E-commerce is perhaps the most telling of those. I think this graphic here, which is from Brazil, I think has been replicated from our report now, multiple times. But you can clearly see how the growth of share of e-commerce of total retail in Brazil, of what that growth represented in 10 years. We were actually able to drive that same kind of growth in the first 10 weeks of the pandemic. So truly weeks where a decade happens. It's worth noting here that as you look forward past May and June and July, there's definitely been a correction here. I don't know what the number is going to be for October, but definitely as traditional retail starts to open up, as people start going back to, let's call it a new normal that everyone has been referring to, we don't expect this to stay at this 12.6% mark, but we definitely think it's going to be much higher than the starting point from before the pandemic. So really an acceleration of years has happened in e-commerce penetration. And just like e-commerce, I want to flip through quickly some of the data that we got from some of the unicorns and some of the leaders in the region, because all the curves are up and to the right in terms of this acceleration. You see here Vitex, one of the new tech unicorns that we saw being minted out of Brazil this year. You see the number of new e-commerce stores that their SMB clients that were opening up per quarter. You see a huge jump already there in the first quarter, so in Q2 of this year, which was sort of the first full quarter of the pandemic. If you look at Ifood, which is the leader in Brazil of food delivery, you also start seeing from the January, February pre-pandemic levels, a 50% growth in what we started to see a few months out. So enormous growth from an already enormous baseline that they were working with in terms of food orders in Brazil. And it's no different when you look at the rest of Latin America. Here we took Rappi's sales, sort of their GMV for all the countries for the rest of Latin America, excluding Brazil, where Rappi is one of the market leaders. And you also start to see over 2x the GMV from July compared to January. So again, massive growth in GMV of food delivery and Rappi sales from already a very high base, given this acceleration that we saw from the pandemic. My partner likes to make a joke about the fact that how we've been spending our time during the pandemic. It's been eating junk food from food delivery and watching Netflix, and it's kind of comforting to see that we're not the only ones. You can clearly see here the number of total downloads of the Netflix, Amazon Prime Video, and Global Play as sort of three examples of big digital streaming services in Brazil. You also see how the downloads almost doubled in terms of the quarterly downloads that these apps were seeing. So again, a huge migration towards digital media as people were home and looking for entertainment. And then finally, just to give a bit of the trailer behind the movie that we have in our full report. I think the key thing that we try to do was we did these 3 deep dives into 3 sectors that we felt had been really deeply impacted by technology and sort of this digital transformation, which was the theme of the report. The first one that we looked at was financial services. And I think financial services is probably the most interesting one and the one that we dedicated most of our attention, because I feel the digital transformation in financial services started almost 5 years ago. So to some extent, we can see the playbook that a lot of the startups followed in terms of gaining market share. And we looked at payments, we looked at digital banks, we were now looking at instant payments, we looked at investments, we looked at a bunch of the different subsectors within the full financial services and sort of fintech sector, and try to show how did startups steal market share from incumbents, how have they grown, and which elements of the market actually made it fertile ground for this tech-driven disruption that happened. And then we try to see whether healthcare and education, which we believe are going to be the next 2 sectors, or 2 very, very large sectors to be disrupted, we try to draw a parallel to which foundational factors existed there that also existed in financial services, and how our startups today, following some of these playbooks, be it by leveraging people, capital, or sort of regulatory shifts to be able to really start making big inroads in these massive sectors. So today I'm just gonna give you a little bit of a taste of some of the data that we picked up for these sectors. Looking first at financial services, I think this is a truly fascinating graph of the total number of financial services app downloads that we were seeing on a monthly basis in Brazil. Again, we chose Brazil as the biggest market, but the graph looks exactly the same for Mexico, for Colombia, for Chile, for Argentina. And you start to see how after the pandemic, there was a massive spike in the number of downloads. So in other words, the number of new people that are going to the app stores, downloading these financial services apps, and basically taking their banking and payment and financial needs digital away from the physical world. And you can clearly see the shift that happened. And a very curious thing here is that we interviewed some of the senior leaders in the central bank, and we had seen that prior to the pandemic, it was estimated that roughly about a third of Brazilians were unbanked or underbanked. Mostly unbanked, people that didn't have a formal account in a financial institution. And now it's estimated that about half of those people now have an account at a financial institution. A lot of this growth was driven by the distribution of sort of financial support that the government gave to Brazilian citizens, which a lot of it, the majority of it was done digitally, but it's great to see that now a lot of people are using sort of digital channels and are now banked and are within the financial sector, because this is, again, thinking about inequality. It's a way for literally millions of new people to have access to the financial sector. Moving on to the second one of the different sectors that we analyzed, we looked at healthcare, and we took an example here of Conexa. It's a telemedicine startup in Brazil, and you can clearly see how the regulatory change that happened, which was the regulator started basically allowing telemedicine to be provided to Brazilian patients, and basically providing equalizing access to healthcare for people that maybe were in rural areas that perhaps couldn't get out of their house. You can clearly see how the volume of the number of calls per day, you're seeing now on a daily basis in July, and this number is much higher now, over 10,000 telemedicine calls happening every single day only on the Conexa platform, which is a B2B platform. Many other platforms exist. Conexa is one of the market leaders. We can clearly see this massive growth that happened over this 9-month period in Brazil. And you can see how the pandemic is accelerating by years some of this tech transformation that was potentially expected to happen already in healthcare. And then finally, looking at education, I think education is the great equalizer. It's a way to provide access to economic opportunities for a huge swath of the population. We think that still access to world-class software developers is something that in the next couple of years is going to start to become more and more of a bottleneck. And it's interesting to see companies like we took an example here of Tribe, which is actually a company, in full disclosure, a company that we've invested in, that offers a fully funded software developer course in Brazil. And you can see how the demand for Tribe's course to become a software developer grew so much that the acceptance rate is now lower than universities like Stanford and Harvard, and even some of the most selective universities in Brazil, like USP, the University of São Paulo, because so many people are looking for these professional courses that can make them graduate as a software engineer and get these new digital jobs that are so much in demand in the market. So we start seeing this innovation happen in education, a lot of it digitally, right? So Tribe is a fully digital course that you can take from your house or from anywhere else and become a software developer and sort of participate in the software transformation. So I hope it's a good sampling of some of the data that we picked up. Again, if you want to download the full report, you can do so on our website, atlantico.vc. And I welcome you to send us any feedback, anything that you disagree with, anything that you think we should change. It's always extremely useful for us to be able to, I think, provide multiple sort of points of view and vantage points in terms of what's happening in Latin America, and to some extent play our role in educating the rest of the world about the opportunity that exists here, but also the immense transformation that we've been seeing in the region. So with that, I'm gonna stop sharing here my screen and welcome Julia back, and I'll hand it off to you, Julia. Thank you.
Thank you. Thank you, Julio. This was very insightful. I would like to invite Julie to turn her camera and her mic on. Hi. So all the J's now together.
Yay, this is fun.
Yes.
Thanks for having me.
Thank you for making the time. Thank you, Julio. We have a few questions, but first I would like to ask Julie. So LAVCA also released a few numbers for the first half of 2020. And despite COVID-19, the numbers look pretty strong. So can you talk a little bit about that? The numbers and what the trends you're seeing?
I'll give some stats, and then there's other areas we could dig into if we want, including picking up on the health tech trend that Julio was talking about. So if we look at the first semester of 2020 compared to the first semester of 2019, venture investment was down by deals and dollars. But we have to take into account that SoftBank deployed a ton of capital in 2019 through their $5 billion Latin America fund. So if you take out SoftBank's investments from 2019, including the $1 billion investment in Rappi, it was a record semester of venture investment in the region, which was interesting. The geo breakout was somewhat typical, with Brazil capturing about 60% of the deals in dollars for VC. Mexico was second at 18%, and then Colombia and Chile at about 8% each. Interesting that in the first half of the year, venture investment, if we look at all of the private capital asset classes that LAVCA tracks, VC was only second to infrastructure in Brazil last semester by dollars. So VC has really kind of risen to be front and center. It wasn't too long ago that it was a blip on the radar compared to private equity and other asset classes. If we look at the fundraising numbers, it's also a positive story. For the first semester, it was about $440 million raised by VC funds across 11 closings, including notably Redpoint eVentures had a $174 million close for their second fund. So this was more than double the fundraising for VC for the first half of 2019, but still under the second half of last year, which included a couple of notable fund closings for Kazakh. And I think that, if we look at what's happened since the first semester, so what's happened second semester to date, we don't have our official research numbers, but we do track deal announcements that are published in the media in our venture bulletin, which I'll give a little plug. You can sign up on lavca.org on the right-hand side of the page and sign up, because every 2 weeks, everything our research team is seeing, we share out with the entire list. So if we look at what's happened just, more recently, we had 3 new unicorns in a single month with Kazakh. Didn't disclose the round, but it was in the several $100 million. Vitex, which raised $225 million and became a unicorn, and dLocal in Uruguay, which raised $200 million. So I have a whole list of other notable rounds I can talk through for the second half of the year, as well as some health tech deals that are on our radar. But I guess as one last observation is that I personally have been tracking venture investment at LAVCA for about 5 years. And it was just perfect timing because I got to accompany this up and to the right, really steady record-breaking growth. And that growth happened independent of what was happening with the political context, with the macroeconomic context. No matter what crisis was going on in what part of the region, the numbers were steady. So now that we're in a kind of unprecedented global crisis, it's been interesting to see things holding relatively stable for now.
Thank you, Julie. I had another question for Julio and for you, but there are a few questions here, so I want to make sure I get to these questions first. So Julio, amazing presentation. What do you think needs to happen to accelerate the impact investing ecosystem in Latin America? How would you justify the ROI from impact investments compared to unicorn investments such as Mercado Libre?
I think that, impact investments and unicorn investments aren't mutually exclusive, right? Like, you should be able to have, unicorns that are high impact companies. I think we have a belief at Atlantico, at our venture fund, that actually some of the biggest financial outcomes are going to come from the companies that are addressing the region's biggest problems, right? So when we talk about education and a company like Tribe that I showed the example, that's giving access to jobs, digital inclusion and education to the entire population. Like, just to give you one example, their first cohort just graduated now a few weeks ago, 100% employment. And I had a chance to meet one of the students who, used to be a part-time Uber driver with a borrowed car, lived in a slum in Minas Gerais, married to a cleaning lady. And he's now a software developer in Localiza, which is one of the biggest and most respected companies in Brazil. Has his first formal job in his life. And I think that those kind of breakthroughs that technology companies are able to provide is where a lot of the impact happens. Like when you think about financial services, I showed a lot of how the unbanked or underbanked population now, thanks to digital channels that are much cheaper, now have access to the financial sector. That's enormous impact when you start thinking about reducing the inequality that I was mentioning as a massive problem and as a massive barrier. Healthcare, same kind of thing, right? I showed Conexa in terms of access to telemedicine. If you live in a rural area which is actually where a lot of the Latin American poor population lives and doesn't have access to good healthcare, you can now do so from your own house through your mobile phone in a much cheaper, more accessible way. And those are all ways that technology is able to address these huge goals. And I think when investors approach these markets and thinking about what are the massive problems that exist and who's going to come up with an innovative solution to solve those problems, you actually end up having, you sort of end up marrying the impact investing with unicorn investing.
I'll just add a bit to Julio's comment, which completely aligns with the way LAVCA looks at this. There's a kind of US historic view that impact for good and investing for good is over here and investing for returns is over here, and there's no meeting in the middle. And there's certainly kind of a macro conversation playing out across private capital that's saying, how do we measure impact? Is there a hit on returns? Is there not? But if we look at the Latin American context, these are categories that have been co-investing for years. So if you look at players like Omidyar Network and Flourish Ventures and Quona Capital, several of which are more fintech focused, they've been co-investing alongside some of the best VCs in the region for years. I think to your point on fintech, Julio, fintech's been the dominant category of venture investment in Latin America almost every semester for the past 5 years. And it would be hard to not consider most of that impactful. So you don't actually need to be considered an impact venture or be a B Corp to be having an impact. You could even argue that Nubank, by making lower interest rate credit cards available to Brazilians is, if you look at the underbanked numbers, is certainly impactful. So from our perspective, we're purely looking at venture investment, which is effectively purely for profit. And even so, we're seeing a lot of impact. And I think health tech is notable as well because health tech kind of exploded last year as the second most popular category of investment after fintech. Not by dollars, but if you look at number of deals, and that was pre-COVID, right? So these are returns-focused investors that are saying there's huge opportunity here. A little bit dicey when you look at the, maybe regulatory issues you have to go through with health tech, but that was the same case in Brazil with fintech and other parts of the region. We're going to be taking a closer look at all of the companies that raised at least $1 million in VC funding that are health techs, and we're going to be specifically looking at the impact of their technology as well, because I think we need to break down bit by bit this sense that these are mutually exclusive categories.
That's great. Thank you, Julie. So I have a question here from a guy that you may have heard of, and it's Al. And I think you can both answer this one. So I think maybe I would like to hear a little bit from each one of you, but why do you think Latin America has lagged behind India or Southeast Asia in VC? And what is the biggest obstacle to bring LatAm VC to parity?
Julio, do you have any comments, or do you want me to take a go with that?
I think the proximity to China helps a lot. Like for Southeast Asia, right? A lot of the investment for Southeast Asia came from some of the big Chinese investors, and a lot of the Chinese companies kind of expanded into Southeast Asia. I don't know what the reason is for India. I do know that India has historically had a sort of very vibrant software engineer ecosystem, right? There's a huge population of great technical talent, and a lot of those people are entrepreneurs, and they're sort of building big solutions. So I think potentially going back to almost that framework, right? Like sort of on the people side, you had a lot of technical talent, and sort of that pulled that tech transformation a little bit before. And Latin America only now is starting to get to the same levels of talent and interest in that, from that talent in entrepreneurship. But aside from that, I'd be speculating. I don't know what you think, Julie.
Yeah, I guess we could look at this through a few lenses, Andy. One would be, what was the footprint of Silicon Valley VCs when they expanded their geography? And a lot of those firms, the first startup I worked for was backed by Sequoia. And in 2005, we were in San Francisco, they were down in the Valley. And the joke from the board member on our team was, this is outside of our investment geography because it's not biking distance. Because we were in South San Francisco. So it was just hilarious. So fast forward now, and they're one of the most, proliferate international investors, particularly in China and India and some of these other markets. The other lens you could look at is what's the development of the local VC ecosystems in each of these markets. And we know from the Latin American context, it's taken years and decades. Locally, homegrown VC in Latin America. Talk to people who've been at this for 15 years. Talk to Eric Asher at Monashis. And some of the folks who were here way before when. It's interesting that Mercado Libre is now the big success story of the region. And to your point, Julio, even outpacing the oil giants is crazy, but Mercado Libre didn't raise any traditional venture capital. So they had to go at it before the local ecosystem was developed. So I think if we look at India and Southeast Asia, there's a similar analysis. To what extent have the VCs from the US expanded into those markets? And I think that the generalized sentiment from them has been, let's go to India and China first because they seem easier. And then let's go to Southeast Asia and Latin America slower. And who's even talking about Africa, which is incredibly unfortunate. And I think from a local market ecosystem, I've been in touch this year with just dozens and dozens of fund managers who, similar to the Latin America trajectory, but a little bit perhaps further along, are raising their second and third vehicles to invest in Southeast Asia and India and other markets. Actually, maybe the third perspective would be, where's China putting their money? And China has become just a proliferate investor, very much in India, although we might see pullback this year because of the geopolitical tensions that have been going on, but increasingly in Southeast Asia, Latin America, and Africa as well. So I just think, sometimes the unicorn stories can seem like they happen really fast, but the actual development of the VC ecosystem, Julia, as you know better than me for actually doing the work of raising funds and running companies and such, is a bit slower.
Okay, there's so many
I'd
questions.
be curious for Andy's perspective on that as well.
Yeah, we're gonna have to turn his camera on and his mic on. So another one. Julio said that Brazil will have the numbers that the US has in terms of technology penetration in 10 to 15 years. But where are they going to be in the same time frame? And then in terms of size of the tech sector?
Yeah, it's hard for me to see where it's basically the question is like almost where is the ceiling for tech let's just take the US as an example. I know many sort of reputable investors that will, bang on the table and say that, 80% of the Fortune 500 are going to be tech companies. And I think that honestly, I don't think it's so black and white in terms of tech and non-tech. I think as we go forward, what is a tech company is going to become more and more gray area. And I think traditional companies are ultimately going to become tech companies, whether they're tech enabled or they add technical elements. But I truly believe that when you fast forward a decade from now, and if you look at the companies that will be leaders in the global stage in 10 years, they are all going to be companies that if they existed today, we would consider them tech companies. And I think the tech companies are just going to be that much further. So I wouldn't be surprised if those 40% are at 60, 70%. If you take the growth rate, so both China and the US are growing still at double-digit annual penetration rates. So I wouldn't be surprised at those numbers being at 60 or 70%. I don't know if they're going to get to 80% like some people have said, but I do think that even the ceiling in those countries is going to be much higher.
I'm curious if Julio or Julia have an opinion on this. I wonder if as well, the question of what we consider tech will shift. So, what will be the normal baseline? Maybe, having a website at one point was considered tech, you know? And now there's a question of like, are you using AI and are you using machine learning and things like that? So I wonder if 10 or 15 years from now, the bar will be higher. Like we'll assume, oh, like having a mobile app is not considered tech, but talk to us 10 years ago and that was really cutting edge. I also, Julia, before you jump to the next one, I want to thread the needle back on the question of Latin America versus India and Southeast Asia and some other markets, because I pulled up a data point from EMPEA.org, which is our sister organization looking at global emerging markets. And in 2019, Latin America VC investment was just behind India and just above Southeast Asia. So I'm not sure it's such a distant game anymore after all. It was a little over 3 billion in Latin America, a little over 4 billion in India, and about 2.5 billion in Southeast Asia.
That's in VC investments?
Yep.
But also like India has something like 50 unicorns or something like pretty intense compared to what, 13 in Brazil?
Well, and that goes back to the question of the ecosystem development, right? Because until a startup can raise a certain size of funding to get a unicorn valuation, they won't be considered a unicorn. So I think it has to do with access to growth capital. But, before the webinar, we were talking about this and there's been a unicorn explosion. I think last year it was 2019, it was, here we go. Auth-O, eBank, Gympass, Logi, Quinto Andar, and Wildlife. So it was 6 new ones last year. I think we've had at least 3 or 4 this year, including 3 in the same month. So yeah, not to say that being a unicorn is an indicator of success, but certainly an indicator of having access to capital.
Yeah, for sure. I'm trying to get here to try to find the best questions to keep the conversation going. Well, let's try this one. So some of the industries which are being reshaped by digital transformations are regulated by governments. Do you consider that regulation could somehow hinder or interfere with digital transformation?
Yeah, I mean, I'd love to take that one because I think taking it back to that framework that we try to share of like people, capital, and regulation. I think if regulation is going against the trend, it'll slow down that flywheel, right? It'll just kind of throw sand in those gears. So the government can definitely create issues, right, in terms of innovation. But on the flip side, when the government is pro-innovation, and actually historically, when you look at sort of regulatory trends in Latin America, all the governments have actually been quite pro-innovation. I think Brazil is a very much a pro-innovation country. And you start to see what's going forward, it's becoming even more pro-innovation. So actually regulation actually provides an accelerant to the transformation. So we showed very clearly in healthcare how changes in regulation, obviously spurred by COVID, just totally unlocked all this value and transformation that happened as part of telemedicine. The sort of part of the financial services story was also brought on by deregulation, right? There was a duopoly in payments that the government went and broke down and said, look, we need to have competition in payments. That's where it led to the existence of Stone, PagSeguro, 2 Brazilian companies that are now publicly listed in the US. You start to see actually the innovation agenda of the central bank in Brazil is probably one of the most aggressive of any central bank in the world. And that's going to bring open banking to all of Brazil. It's going to bring instant payments to all of Brazil. And I actually think that those kind of things are going to actually provide a massive accelerant into those sectors. Sure, there's some sectors that are, there's obviously regulatory capture, industry incumbents often want things to be the way that they are. So you're always going to be going against, some people are always going to be trying to go against the tide, and it's not going to be perfect for every sector. But we feel like like I think Julia said, if someone says tech tsunami, right? There's just so much momentum behind it, and the power of technology to solve these massive societal problems that, the 5-10 year horizon, regulation is going to be very much in favor.
Just, anecdotally, when Nubank was raising their first round of capital, as the story goes, they had the biggest pushback was, oh, you can't possibly break the banking monopoly or duopoly or oligarchy or whatever you'd want to call it. And then, to your point on instant payments, Julio, I think that it's in a couple of weeks that the central bank is officially launching their instant payment system. So just a, radical amount of change in a small amount of time, including in a market that was considered, impassable in terms of being able to innovate in that area.
I have a question here that was asked the same question more than once. So I think Julie touched a little bit about the trends. Also, Julie and Julio talked about the trends of the industry and what new industries are coming or getting becoming hotter in Latin America, like fintech, healthcare. But how do you see? So I'm going to ask two parts. How do you see legal tech, which is the question from the audience? How do you see legal tech in Latin America? But what do you see for 2021? The industries that you think are going to be hotter in 2021?
Julio, do you want to go first, or do you want me to throw some comments
You
out?
can go ahead.
Yeah, well, we don't make predictive statements in terms of what's going to come, but we do see a scattering of legal tech deals as a category that's still small dollars, but piquing our interest. Health tech and ed tech were that way 3 years ago. There was a scattering of deals in small dollars, ag tech as well, and they were interesting, and now they're a lot bigger. But to give a kind of data-driven answer, I'll just talk about some of the bigger rounds that have crossed our radar in the second half of this year, and you can see some of that diversity in terms of sectors. Neon Pagamentos, Brazilian fintech, raised $300 million. That was PayPal Ventures' first known LatAm deal. Wildlife, Brazilian gaming, raised 120 million. Auth and Acesso Digital are Argentine and Brazilian, respectively, identity verification solutions. Auth raised 120 million led by Salesforce Ventures. GA and SoftBank were behind Acesso Digital. There's a social CRM called Take Blip that just raised $100 million. Notco, which is this fascinating Chilean food tech, raised $85 million. And the lead investor was L. Catterton, which is a private equity investor. This is like a game-changing type of movement for
And they had Jeff Bezos too on the cap table.
And you're right. Bezos Expeditions invested in them in their last round. And we followed this company when they had only raised a couple $1 million and they were already selling their product. They'd already gone to market and taken 10% of their category in Chile with a couple $1 million. So it's really cool to see that kind of financing. Tienda Noob, aka Nuvem Shop in Brazil, raised $30 million. That's an Argentine e-commerce platform. So you can already see diversity even in this kind of like, 80 million and above category, which is not what we would have seen in previous years where you'd see a lot of fintech and, marketplaces.
Yeah, just to add to the legal tech commentary, I think anything that breaks down red tape and bureaucracy in general, and I think a lot of companies that get included in legal tech often sort of do that. I think that those are needs that the entire region as a whole needs. I think you do still have a lot of red tape and a lot of bureaucracy. It's getting a lot better, but still compared to developed nations, we're still way behind. So there's a few companies I can think of right off the bat. We talked about, Julie mentioned a few identity verification companies. I think ID Wall is probably one of the biggest ones in Brazil, has raised a few big rounds. I think there's one called Mediação Online, which is sort of basically to take cases from the legal system and sort of allow them to get resolution sort of through digital fashion. I think there's a lot of other companies that have been springing up, and I think the market is actually quite fertile for more companies to go and sort of chip away at a lot of these bureaucratic and sort of red tape needs that the country has. And then thinking about general sectors for next year, and I'll talk about probably the next 3 years, I think it's some of the ones that I highlighted in the presentation. Financial services, I think, continues to be, there continues to be a lot of opportunity. I think these changes with the central bank, with open banking and instant payments is going to actually spur on even more innovation. And then I think, again, I would always look at what are the big problems that need to be solved and addressed in the region and in sectors that represent a big part of the GDP. And that's why I keep going back to education and healthcare. I think a lot of the solutions tend to be software solutions. So those are SaaS or sort of enterprise software type solutions. So we continue to believe in that. And I actually think that, I think a lot of VCs don't like e-commerce investment, but I think e-commerce and sort of e-commerce marketplaces, I think there's still a lot of room to grow in that. And we still think that a lot of the big companies that are getting started, that are going to be big companies in the future, are going to be people that are going to be disruptive in the way that people do commerce and buy and sell goods.
By the way, prop tech was a niche category by dollars invested a few years ago, and now there's a really strong cohort of prop techs in Brazil, Mexico, Colombia, all across the region that are gaining traction and raising more money. So things can shift quickly.
That's true. Okay, so I think we're 5 minutes to the hour. So I want to touch on, so the title of the webinar was Investing in LatAm, and the idea was to show some numbers and how the LatAm tech ecosystem is growing and evolving. So one question, but two parts. So Julio and Julie, do you think that now is the time for international investors to start looking at Latin America, and how can they do that? We've seen like Sequoia, Excel, and Andreessen doing their first deals in Latin America, not pretty recently. And then the second part of the question is, how do you see the balance between LatAm-based VCs investing in Latin America versus US or European VCs investing in Latin America over the next few years?
I'll take this one. I'm obviously very biased here, but I think it's very clear. I think from the data in our presentation, just how much higher the potential is for the region. I think also how we're actually really at this inflection point in terms of the growth of tech and the tech opportunity. So, if you're ever going to go into the region, it's sort of at the beginning of the inflection point, and not sort of 3 years into it, where perhaps a lot of the growth has already kind of taken a few steps forward. So I'm obviously very biased that, I was living in the US, with Julie in San Francisco a year ago, and now I've moved my family down and I'm here all in Brazil, investing in the region. So I think my actions probably speak louder than words. And I think in terms of investing, I think what we've seen are these, brand name international investors investing in the region. I think what's been curious is that the majority of them, or almost all of them, have always sought a local partner, right? Because if you're sitting in an office in Palo Alto, it's hard to know how to hire a VP of technology or of operations in Mexico or in Brazil or in Chile. So having local partners is critical. I personally have tried to foster good relationships with US VCs. I had worked some time at Benchmark Capital, which just did this big wildlife round. And I think that more and more the local VCs and the international VCs are trying to foster these good relationships to try to invest jointly in the region. But ultimately, a lot of the early stage investments are going to be done by the local players. And I think the global players are going to start to sort of move in, but probably at a slower pace.
Yeah, I would argue maybe 2017 was the year for international investors to enter the market, because that was when Diddy and SoftBank, along with Riverwood, invested in 99. And not to say that that caused an increase, but if you look at the timestamp on that, after that was when you saw much more significant commitments. And if you're an international investor that wasn't in the market by the time SoftBank launched a $5 billion fund, I hope you at least tuned in from then. But to your point, Julio, on global players partnering with local investors, in 2019, 30% of all of the VC deals and 70% of all the VC dollars deployed included at least one globally based GP and at least one locally based GP. So to us, that's an indication of a huge breadth of cooperation.
Great. So I think we have just 1 minute. I don't think we have time for one more question. But this was such a great discussion. Thank you so much, the 3 Js. This meeting was recorded. We will send the recording to everyone that RSVP to the event. We'll post on social media as well. The Atlantico report I shared on the chat. Julie, do you want me to share that other one too, the LAVCA report? She's on mute.
You're on mute, Julie.
Oh, sorry, I just put it in the chat. But just wanted to thank you, Julia, so much for hosting us. It's so much fun to do this. And Julio, what an incredible accomplishment. So congrats to you and the entire team. I think this is a kind of data-driven, comprehensive stack of information that really benefits the ecosystem. And we're thrilled that you've launched it, and great to see the traction it's getting.
Thank you, and thanks for the panel. It's always great to see both of you, and it was a great discussion.
Thank you. And for those who are still here, please take a moment to respond to the survey and rate this event so we can get better and bring better speakers every time that we launch a Zoom meeting. So thank you so much, and until next time.